This video is on the technical analysis of Ger30, which is also known as Ger40, and we find ourselves on the monthly chart at this point in time, and we can see in regards to the monthly chart we have what seems to be a huge double top forming. However, in order for this pattern to be validated, we need at least one bearish candlestick to close at that level, and in my humble opinion, chances are that once we get that bearish candlestick, we may potentially see the market actually move further down to complete this huge M structure. However, having said that, this, or rather the completion of this huge M structure, may take quite some years to happen. And also remember that as much as we have this potential M structure, we also have this level over here, which is the neckline of that M structure, and it's now also a very strong level of support at this point in time. And as much as the anticipation in the future would be for the market to actually move further down from where it is to around this level, in line with where it started to complete that structure, what may possibly also happen is that we may actually see the market only move further down to around this level, which is where we have that neckline, and it's also a very strong level of resistance, or rather support. And at that point we may then get a reversal of sorts, right? Especially because whenever we have, as I say, patterns such as the M structure, what normally happens is that a lot of traders and investors sell on the second leg of that M structure, and they put their stop losses just above, right? So it would make sense even if price were to come back to the neckline to test it, only to move further up to stop hunt all of those stop losses that are located in and around that region. And that is because the markets will always go to where the money is. Anyway, let's zoom in and see what else is happening in regards to the monthly chart. At this point I don't see much, but what I will do now is head down to the weekly chart, and here we are on the weekly chart. I just want to actually add a resistance area, and just a reminder that support and resistance are not lines, right? Support and resistance are not lines, they are areas. But just for the sake of simplifying our analysis on these charts, I'll just have that resistance area as just a line, right? Another thing that I see in regards to the weekly chart is that if you actually look at where we have that resistance area, we actually had a first touch over there, or a first rejection, a second rejection, and a third rejection. And in the books of many traders and investors, whenever we have a third rejection on a trend line, that means that the market is likely to push further down, right? That means the market is likely to push further down. However, as I've said, guys, whenever we have these patterns such as the double top, I mentioned to you guys that what normally happens is that a lot of traders and investors buy, or rather sell on the second leg, and they place their stop losses just above. So it is quite possible that this may also be a trap, and we may actually see a situation where we see the market actually move further up to grab all of those stop losses and then only move further down. So we just need to be vigilant and monitor the situation. Anyway, what else do we see on the weekly chart that we should be looking at? On the weekly chart, I can see that we also have an overextended W structure over here, which has a neckline at that level, more or less. And we could say that we did indeed see the market come back to the neckline to test it, and at the neckline is where we should have looked for those potential buying opportunities, and our take profit should have been this level over here, right? I'm just going to add a neckline for the W structure, as that neckline is also now a very strong level of support at this point in time. So we could say that this area over here is the neckline of that W structure, right? Anyway, what else do we see at this point? I don't see much at this point. So what I will do now is head down to the daily chart, and here we are on the daily chart, and I'm just gonna add my channel. Just bear with me, everybody. Let's see, channel. There we go, more or less, in as far as our channel of the daily chart goes. And just remember that we just need to ensure that our drawings, or whatever patterns or objects that we add to our charts, are as close to perfection as possible, just to ensure that ultimately when we do execute, our execution is also very much in line and perfect, right? Anyway, to recap, remember on the weekly chart we also spoke about how we actually had this W structure over here, which had a neckline at that point, and I said to you guys that we saw price breaking to the upside of that neckline, coming back to the neckline to test it, and at this point where the neckline is where we should have looked for those potential buying opportunities, and our first take profit should have been this level over here. Why that level? That is because it's a very strong level of resistance, as we had in the past multiple rejections at that level, right? Anyway, here we are on the daily chart. What else do we see on the daily chart that we should be paying attention to? Remember, on the weekly chart we spoke about how we have this area, and this level over here, or this rejection, is the third touch at that level. And I said to you guys that a lot of people actually anticipating that the market will continue to move further down, right? However, just bear in mind that we also spoke about this area over here, which is the neckline of the W structure that I spoke about. It's also now a very strong level of support, as we've had multiple rejections within that region, and we may get another rejection at this point, only to see the market move further up, especially because we are still in an upward trending market, as you guys can see. And I also mentioned to you guys that we have that area at the top, which is carrying all of that liquidity, and that liquidity is actually stop losses that are located within that region. And I said to you guys that or rather the market will always go to where the money is, right? But what else do we see on the daily chart that we should be looking at? On the daily chart, guys, as much as we have this area being a very strong level of support, can you also see that we may potentially get a head and shoulders pattern at this point, right? However, in order for this pattern to be validated, we need at least one bearish candlestick to close at this side, or rather on that side, and also for the market to close sufficiently below this level, which would now be the neckline of that inverted, or rather that head and shoulders pattern. And once that happens, I would love to see price then close also below this channel, and that for me would be confirmation that the market will indeed, or is likely to move further down, at least to this level, which is in line with this level, which is more or less where that head and shoulders pattern started. Can you guys see that? So what I'm saying, in other words, is that should we get at this level over here a bearish candlestick, that would confirm the head and shoulders pattern. However, because the neckline is over here, I believe that before we do sell, we need the market to actually close below this neckline over here, as well as to close below this trend line. Once that happens, I would then wait for the market to head up to the neckline to test it, and where we have that neckline is where I would look for those potential selling opportunities. And I believe that the market should move further down to around this level at least, which is in level with this level, which is exactly where it started. However, having said all this, guys, we may get a bearish candlestick at this point, only for the market to move further down to the neckline, and at the neckline we may then see the market actually move further up. Why do I say so? That is because, as I've said, guys, multiple times, this is a very strong level of support. To add to that, we also have this opposing trend line, and also we are still in an upward trending market. And I spoke to you guys about how we have those stop losses that are located here, and those stop losses are actually money that needs to be triggered by the market at one point or another. So it is quite possible that we may still see the market actually move further up to that level. Having said that, in as far as buying or selling opportunities go at this point in time, I don't see any. However, let's head down to the H4 chart and see if we can find any actual buying or selling opportunities for that matter at this point in time, right? And here we are on the H4 chart, and let's just zoom in and see what's happening. And just to recap, remember guys, on the bigger time frames we spoke about how we have that huge W structure over here, which has a neckline at that point. We saw price breaking to the upside, coming back to the bottom side, or rather to the neckline, and then at the neckline is where I said we should have looked for those potential buying opportunities, and that our take profit should have been this level, which is a very strong level of resistance at this point in time, as we had multiple rejections at that point. But let's zoom in and see what's happening on the H4 chart. What do we see on the H4 chart? Also, remember, I also spoke about how we have a potential head and shoulders pattern here, with the side being the left shoulder, this being the head, and potentially this may be the right shoulder. However, we're just waiting for at least one daily candlestick to close bearish here, right? Anyway, what else do we see, guys? What else do we see on this chart that we should be paying attention to? At this point, I really don't see much. I don't see much at this point. However, I can see that we have this W structure as well, which has a neckline at that point, and we may potentially also see price come back to the neckline to test it, and at this point is where we may see the market actually move further up to complete this W structure, right? Especially if the neckline aligns with any key numbers that we have on the Fibonacci retracement tool. Let's just add that neckline and also utilize the Fibonacci retracement tool just to see if that neckline actually aligns with any key numbers that we have on the tool, right? So let's have a look. Let's see, and here we go, more or less. And we can see that the neckline, which is over here more or less, of this W structure aligns with, we could say, both the 38.2 as well as the 50% Fibonacci retracement levels. So what this means is that should the market, or should price from where it is actually come back to where that neckline is, which is over here, right, we have reason to look for buying opportunities at this point. We have reason to look for buying opportunities at that point. However, having said that, just keep in mind that earlier I spoke about how we may potentially get this pattern over here, which is a head and shoulders pattern. So we may find that price at this point actually moves further down, and actually on the daily chart gives us that much needed bearish candle confirmation, and then we may potentially see the market move further down to the levels that I spoke about earlier.